Hey guys, it's Charlie, and in today's video, we'll be going over 5 things you need to know before starting an S corporation. Now, these are all things that I wish I knew before I started my S corps. They're really important to know, so that's why I'm really excited to make this video. And yeah, make sure you watch them to the end because these are definitely things you don't want to miss. And yeah, just knowing them, it's going to make your life a lot easier. It's going to make the whole process much more simple. Before I started my first S corp, I didn't know how to do it. I thought it would be super complex, but the truth is it's actually quite simple. Now, yes, if you try to start your S corp yourself, there are quite a few steps. We have a ton of videos showing you guys how to set up an S corp yourself, but the truth is with all the legal documents, all the things that need to be filed, all that stuff, compliance can get pretty tricky and a lot of people do it incorrectly. That's why we just recommend using a formation service like Northwest to do all this for you. It's probably the biggest hack when it comes to starting an S corp because you can basically set up your S corporation in under 10 minutes. And the great news is that we actually have a deal with Northwest giving you guys a $39 formation package. You guys can get that exclusive deal down below by clicking on the link. From there, it's super easy to set up your S corp. Just follow the steps and within about 10 minutes, you should have your S corporation filing started. So the next thing you need to know is what S corps actually are. And a lot of people get really confused with this because they have LLCs, there's C corporations, there's S corps, all that stuff, right? The truth is that an S corp is not actually a business entity. Instead, an S corp is a type of tax status. And so yes, LLCs and corporations, those are business entities, actual business structures. But an S corporation, it's basically just like a filter or something that you label your existing corporation or LLC. So I know that sounds a little bit confusing, but basically to have an S corporation, you first need to have either an LLC or corporation. And then after that, you're going to file form 2553 that's going to elect to have your LLC or corporation taxed as an S corporation. So that's basically what it is in theory, but when you are setting up an S corporation, you're basically going to be setting up that corporation first, and then they'll be filing form 2553 for you. So yes, it is a seamless all-in-one process. So now you might be wondering, why would I ever want to have an S corp if I can just create an LLC or C corporation? Well, the S corp tax status actually has a lot of advantages, and we'll actually talk about this later on in this video when we get into why it can help you actually pay less in taxes. The next thing that's really important to know is whether or not your LLC or corporation is eligible to become an S corporation. So in order to elect S corp status, here are all the things that you are going to need. So for your existing LLC or corporation, you must not issue or have issued more than one type of stock. You cannot have over 100 shareholders within your company, and there are some more detailed rules on what a shareholder actually can be or cannot be, but I'm not going to go into that in this video. And then the last thing is that your business cannot be an ineligible corporation. So that includes things like domestic international sales corporations, insurance companies, or financial institutions. This is not going to apply to most people. Most of you guys are going to have a corporation or LLC that is, eligible to become an S corp. And then the question becomes, should I actually have that S corp election to save money in taxes? And that brings us to the next point. So basically, you guys need to know that there can be pretty massive tax savings when you choose to be elected as an S corp. And the main reason for this is because of the self-employment tax benefits. If you are a sole proprietor or an LLC, you already know that all your income, it is pass-through income. It flows directly to your personal tax return. Now, the unfortunate thing is that all this income is subject to self-employment tax, which is currently 15.3%. So for example, if you're making $100,000 within your sole proprietorship or your LLC, we're talking about a net 100K by the way, then you're basically going to be paying $15.3 thousand. Now with an S corp election, you're actually able to pay less in self-employment tax. And the reason is because not all that profit is going to be subject to that self-employment tax. The reason for this is because you do need to run payroll. You need to pay yourself a W-2 salary. I know that sounds a little bit weird, but in this example, let's say you're the owner of an S corporation. It brings in $100,000 of net profit. You yourself have to pay yourself a salary in this case of, let's say, $40,000. And on that $40,000 of W-2 salary, you do need to pay that self-employment 15.3% tax. However, on the rest of the money, the $60,000 that's left over, these are going to be counted as distributions, and that money is not subject to that 15.3% tax. So in this case, you're saving over $9,000 just in taxes alone, because $60,000 times 0.153 is just over $6,000. That's your savings. Now, if you have a C corporation, you know about double taxation. You are basically getting twice in all the money that your company is making. And so when you elect to have your C corporation taxed as an S corp, it goes from that existing double taxation to being a pass-through entity. I know it's a little bit complicated, but in a nutshell, you are saving a ton of money on taxes if you have an S corp, but this only applies if you make over a certain amount. For most people, I'll say if you're making over $50,000 net per year, it will make sense to switch to an S corp. And you might be thinking, why is that the case? Because I'm saving that 15.3% on self-employment tax. Well, the reason is because there are extra protocols and requirements when it comes to an S corp. it's a lot harder, and we'll be talking about that in the next section. Okay, so the next thing you guys need to know is that S Corps, they are harder to run and maintain than a sole proprietorship or a normal LLC. You're gonna need a board of directors. There's gonna be shareholders that hold stock within your company. You'll need to hold meetings where you have meeting minutes. And yeah, there's just a lot more record keeping that you guys need to have. Now, of course, when you guys set up your S corporation using something like Northwest, they're gonna handle all this stuff for you. They'll give you all the different templates and things, but that definitely is something to keep in mind. And the next thing is the compensation requirements. So like we said earlier, you do need to give yourself a payroll when it comes to an S Corp. The reason for this is because the government, they know that people have S Corps to save money on taxes, but they do require you pay a reasonable compensation to yourself in that S Corp. For example, if you make $100,000 in net profit and you pay yourself $0 in payroll and just take $100,000 in distributions, which gets rid of that 15.3% self-employment tax on all your earnings, then yes, the IRS knows that you're doing this to save money and they don't allow that. You need to pay yourself a reasonable salary. And this is basically an amount that you and your CPA or accountant need to decide on. A really ballpark figure is going to be around 30% of your net income. But again, this really depends, and this is not supposed to be financial advice. You guys need to talk to your own CPA to figure that amount out. So for example, running payroll, it does cost money. We recommend just using something like Gusto or ADP. Those are our two favorites. If you guys actually sign up for Gusto using the link down below, you will get a free gift card just for doing so. And yeah, there's just much more work involved, especially when it comes to all this record keeping, with the compliance. Even filing your taxes is more hard for an S corporation. So that's why this does have added costs, and that's why it makes sense only to have an S corporation if you're making over $40,000, $50,000 net per year. That's when the savings from not paying the 15.3% self-employment tax on all your income, that's when it sort of can offset the additional costs involved with having an S corp. So yeah, those are some of the more fundamental things that you guys need to know before starting your S corp. Just know that an S corp is a very popular business structure within the US. There are millions of S corporations currently. I have a few of them myself, and the reason is because it does help me save money in taxes. Again, if you guys are looking to create your S corporation, we'll have a link down below to Northwest. That's one of our preferred business entity formation services. They are really amazing, super affordable. Yeah, they basically just make sure that everything is done compliantly and correctly. Because trust me, you don't want to mess it up. I do want to say, if you guys use our link, we will get a small referral fee, and that's basically what helps keep free videos like this possible. So thank you guys so much in advance. Anyways, I really hope you guys found this video helpful. I've been using S corporations for quite a few years now, and those are some of the things that I wish I knew before I started my first S corp. If you guys got any value from this video, we'd really appreciate a like and subscribe. And yeah, the whole goal of this channel is to help business owners start and grow their businesses. Thank you so much for your time, and I'll see you in the next video.